Hey guys, welcome. We're going to talk Nvidia today, the graphics card manufacturer, ticker symbol NVDA. I think this one has a lot of story behind it. You know, these guys are at an inflection point for the business. They're changing up a whole lot of things. They're really growing strongly. They're growing out of this very dedicated graphics card sort of business in the gaming industry principally into all kinds of other things. So I want to talk about the new markets that they're getting into. I want to talk about the valuation. Is it maybe too late to buy into these guys because they've had a heck of a run up in price? So I want to look at all of that. I want to build up a bull case because I think there's a lot in favor of this company, but I also want to take a look at the risks and build up a bear case and try to make an argument for why we might not want to buy this one right now. So stick around till the end because I want to give you all of those points, and then at the end I want to give you my analysis of how the whole thing shakes out. Let's get into it. Okay, so the company story is reasonably straightforward, right? I mean, most people know who Nvidia is. They're pretty much a household name at this point. If you have a computer, if you're into gaming at all, especially, you're absolutely going to know who they are. They make these higher-end graphics cards for computers, GPUs as they're called, graphics processing units. And, you know, if you have any kind of demanding visual application use case for your computer, whether it's in, you know, design or something like that, or whether it's in gaming, you're going to need a more capable graphics capability, basically, than comes with your typical desktop PC. You're going to want to add in one of these GPUs, right? And so there's a lot of other lines of business that they're getting into, and this is sort of the expansion that they're moving beyond that gaming business. They're getting into servers, they're getting into data centers, you know, they're getting into these specialized system on a chip solutions. They're a big supplier of mobile phone components, and now they're getting into autonomous driving, and there's a big automotive segment that's opening up for these guys. So that's what I'm talking about. The business is changing. It's turning a lot. This company is not what they were 10 years ago, you know? So that's it, right? It's about this expansion point, and that's really what we need to take a long, hard look at here and see if this expansion makes sense and if the investment opportunity is here for us.
What's the upside potential?
Okay, the biggest point in favor of the bull cases is basically these new growth vectors that I'm talking about, right? Like, these guys are now opening up many new multiple lines of business, and they're coming out of this legacy gaming market. And the reason I say legacy is that they're sort of leaving behind that gaming business, and they're opening up into all these new branches. Now, legacy in this context is a good thing for these guys because that legacy gaming business provides a very stable base of ongoing revenue. It's very profitable. It continues to be profitable, and it's going to be profitable into the future. So it's not like it's dying. They're going to still be expanding that gaming business, but it's really nice to have that dependable revenue stream go forward as they get into new tech, right? So you look at these new lines of business, they're getting into artificial intelligence. There's some highly specialized solutions these guys have here. They're getting into augmented reality and virtual reality, data science applications and data visualization applications, robotics, and autonomous driving is probably the big one here too. They're really latching onto and pushing hard at this autonomous driving market. And there's a lot of players, you know, BlackBerry and others, Intel, IBM, everybody's trying to build out these autonomous driving platforms for the next generation of cars. Nvidia is right up there, you know, with all the others trying to do this as well. So you look at where the revenue growth is coming from right now as they engage in that transformation. You know, data center revenue grew 82% over the last 5-year period, while gaming grew at about 22% over that same 5-year period. So you can see where that growth in gaming is slowing down. It's not what it was versus, you know, the explosive growth just in these data center applications. And then if we extrapolate from that into some of these earlier stage businesses that they're in, like autonomous driving, right? I think we're going to see the same aggressive growth numbers in revenue in these other applications over the next, you know, 2-3 year period, which is what has the market so excited right now. And that, more than anything, has been driving the share price over the last few months. Crypto is a tailwind for these guys because the thing is, you can use GPUs to mine crypto. They make pretty good mining rigs, and you know, a few months ago, maybe a year ago, they were the most prevalent mining rig, I guess, in terms of GPUs, and they've been overtaken a little bit by these specialized mining rigs called ASICs. But you know, it's not really a question of ASICs killing GPUs for Bitcoin mining applications or coin mining. It's more about which types of coins you're after. You know? So right now, I didn't realize this, but ASIC rigs are better for Bitcoin, but GPU-based mining rigs still have an advantage in some coins like Ethereum. So, I think if Ethereum continues to do well, it's a strong coin, right? I think it will continue to do well. So I think that's still going to be a tailwind for these guys. Crypto prices have sagged over the last few weeks, but that's volatility in crypto, right? So I don't know what that means for the future. Nobody does. But still, I think if Ethereum continues to grow up in value and it attracts miners, they're going to be out there buying Nvidia GPUs to mine those coins. That's nothing but good news for these guys. So it's still a strong potential tailwind for Nvidia. There's a massive deal that was announced back in September, which is their acquisition of ARM microprocessors. The ARM CPU architecture has been driven by this UK company for a long time now. They were public, they went private in 2016, they're owned by SoftBank, and this is a $40 billion offer that Nvidia has out there to acquire ARM. It's a stock and cash deal. This is a major deal because it would potentially move Nvidia into the ARM technology space and really make them the dominant player there. They'd be in a position to drive ARM technology for the next few years. That's huge because ARM is potentially an x86 killer to my mind. We have AWS moving towards ARM solutions in the cloud. I think the writing's on the wall for x86. It's a dead end. We see projections out there where the chip market is absolutely moving towards ARM, and we're actually seeing shrinkage projected in the x86 cloud computing market. I think this move makes nothing but good sense for Nvidia. They want to be that dominant player in the ARM space. It's really going to put them in a strong position in the data center and the cloud market. So if they can close the deal, I think this is fantastic news for the company. Talk about new markets. It doesn't stop. I mean, these guys are now cracking open a CPU market. So they have this new product called Grace. It's their first CPU chip. It's coming in 2023, and surprise, surprise, it's an ARM-based CPU. So it's not any kind of x86 architecture. So again, they're pushing heavily into this ARM space. I think we'll see this is going to be a really capable chip in that cloud compute, data center, AI sort of market. I don't know, but I suspect it'll have applications in other markets as well. And what I'm really excited about, and this is what I'm looking forward to, is some kind of CPU GPU fusion here, with the technology that they might come out in the Grace processor line, maybe second gen, whatever it is. But the problem here has always been the constrained communication between your GPU and your CPU. There's massive amounts of data that need to move back and forth between the two, and there's no real good solution for minimizing that bottleneck and removing those constraints. AMD's been working on that. Apple's solution is the system on a chip with the M1, but again, that gives you constrained GPU performance. So, how do you unleash the performance of both chips and remove that communications bottleneck? I really suspect that Nvidia is moving towards solving that problem. And I think if they can come up with a good technology there, that could be incredible news. There could be a heck of a catalyst there if something is announced in the next couple of years. I'm really optimistic that it will be. Okay, so, the Q1 financials here for fiscal year 2022 were strong. We're seeing crazy revenue growth. If we take a look here on the portfolio 123 snapshot page, you can see really consistent sales and earnings growth over the last 5 years. Like, these are super strong numbers. And if you take a look at the valuation, yes, it's high compared to the industry, but, you look down at these return on equity, return on asset, return on investment numbers, and you can see why. These guys are generating a really impressive return for investors, and that's what you're paying for, right? Yeah, the valuation is double industry average, but you're paying for those really impressive returns, and it's being recognized in terms of revenue, right? If you take a look at the last 5 quarters, we've had consistent upside earnings surprises. That's what's fueled the stock price over the last year. You keep beating on earnings and you keep putting in these strong revenue numbers. You keep opening up these new lines of business. I mean, the investors get really excited about the multiple good news stories that keep coming out, and it's absolutely reflected in the numbers.
Let's talk about risk.
Okay, guys, bad news time. So, let's build a bear case. Let's see if we can point out some of the risks here. Number one, I am a little concerned that we could be at a peak here, both in terms of the stock price performance and some of the underlying fundamentals in the business. I think there's three tailwinds that have driven the price to the point where it's at now, and all three of them might be stalling out right now, right? So, number one is crypto. Price of crypto has sagged like crazy over the last few weeks. GPU prices have already fallen in response to this. It's all over the news right now. So again, we don't know what's going to keep happening with crypto, but at least at the moment, it looks like crypto may have hit a short-term peak and it may be backsliding. That's not great news for GPU sales into the next couple of quarters. The chip shortages have been a huge tailwind for these guys. There's no end in sight to that, but I think it's at least not getting worse. So I don't think there's going to be further supply side pressures that are going to drive the prices of chips even higher. And so that's a tailwind that is best leveling out or not growing like it was in the past. It feels like it might have peaked. And finally, gaming has been huge during the pandemic. Obviously, everybody's locked up. They're becoming hardcore gamers and all this kind of thing. I think at least that growth tailwind has been removed from gaming. So the actual sales that have been driven from everybody buying these new gaming rigs, I think that's being removed a little bit as well. Good news for anybody looking to buy a video card. Maybe those ridiculous prices are going to come back down to normal. But again, it's potentially a removal or a stalling out of these tailwinds for the company. Number two here is there's a lot of talk about being in a tech bubble. I mean, a lot of that's just noise, right? Who really knows? Nobody knows. But, I think there's a lot of fear out there. The market has a lot of sentiment that maybe we're in a bubble, maybe we're at a peak, and there's elevated risk of the bubble bursting. When investors are scared of that, they're a little bit more hesitant to buy into pure tech plays like Nvidia. And then if you line up inflationary fears alongside of that, I think the big question now is whether these inflationary pressures are temporary, like the Fed is saying, they're going to evaporate once the supply chain wrinkles work themselves out. Could be. But if it's systemic and if it's here to stay for a long period of time, then tech as an investment is less and less attractive. And I think we're going to potentially see that in the share price. So, it feels like a bad time to buy a pure play tech stock like Nvidia based on those two factors. Oh, competition. Holy cow. There's a lot of players in this space and everybody is driving really, really hard to capture all of these new markets, right? Like the AR and the VR stuff and the robotics and data sciences and some of these cloud data center services and autonomous driving especially, right? There's so many players that are going after all of those markets just like Nvidia and really, really strong ones, right? Like AMD is coming hard at the data center market. That's a key expansion for them. They're absolutely going to eat some of the GPU sales. They're the top competitor to Nvidia in that GPU gaming market. Some of the leading edge, more focused tech companies in autonomous driving, I think might have an edge here in that particular space. I really, really like what BlackBerry is doing with the QNX platform for autonomous driving. I think they've got cybersecurity nailed. I think that the ability for Nvidia to compete and build a super secure autonomous driving platform, I would give the lead in that race to BlackBerry. Intel's Mobileye, that feels like a more mature autonomous driving solution if you compare it head to head to what Nvidia has at the moment. And finally, you've got the whole Chinese market thing, right? I think the writing's on the wall. China is almost certainly going to lock American companies out of the autonomous driving market in that country. So that whole thing is probably disappearing. It's not within reach of any American company. So that's really going to limit, some of the international opportunities for any player like Nvidia. So the competitive landscape is really, really fierce and it's difficult to navigate. And the last point I'll make here comes back to China again. There's a really good chance China is going to kill this ARM deal. They're in a position to potentially do that because these companies have a lot of business in China and, they may come and absolutely kill that. They don't want to see tech companies being that dominant, American tech companies being that dominant. dominant in that particular space. Now, you know, I think my answer to that particular bull or bear case point is that that's probably not as bad as it seems, because I think everybody knows this, right? I think this is fully expected. It's priced in. Nobody believes that the deal is going to go forward as is, given the roadblocks that China is going to put up. So the deal needs to be modified in some way. I don't know how that's going to be. Qualcomm is in there. They're trying to negotiate some sort of consortium, you know, multiple players type of thing. So I think that, you know, multiple companies can probably come together and figure out a way to get this deal done, or maybe there's some modified deal that will get done with or without the approval of the Chinese authorities. I don't know, but I at the very least, this is priced in, and I think everybody is very motivated to find a way to get this done, and I'm fairly optimistic that they will. Okay, let's wrap it up. So the bull case, it's based on really, really impressive growth prospects in all of these new markets, right? The company is going to climb into all of these new things, and I think they stand a really, really good shot at succeeding in multiple new markets. The bear case, on the other hand, though, is based on the current valuation, and it's based on that competitive landscape out there, right? Like, it's really difficult to know that you're buying at a good price, and it's really difficult to know how much of the market these guys are going to capture go forward. That said, look, I really think the bull case is the clear winner in this one. You know, I think the incredible growth that they've demonstrated over the last little while tells me that they can keep executing into the future. I think the valuation is not that bad. Honestly, I think you're paying a fair price for really, really strong growth prospects. And on the competitive end of things, look, Nvidia is no stranger to this, right? They've been in that fiercely competitive market for a long time. And I think the total addressable market sizes in all of these opportunities are astronomical. There's more than room, or there's room for way more than a single winner in a lot of those markets, right? So I'm really confident that a strong player like Nvidia is going to be able to capture a lot of that market share from the competition. And full disclosure, this is one that I'm looking to get into actively right now. I've got a small position open, and I'm probably going to increase it as soon as I can. And there you go, guys. That's my story. I hope it helps. Please throw the video a like, subscribe, ring the bell, and I'll see you all in the next one.